The stock market is going to crash and we're all going to die! My name is John Ross with Finance on a Budget. In this video, I'm going to be discussing what you can do when the stock market is up, what to do if the market is down, and the steps you can take to minimize any losses. Winning and losing stories. So there was this one day when lemonade was down 5%, so I bought a few shares. As the day went on, it kept going down, and I kept buying. I kept buying until I ran out of money. The next day, the market came back to its senses, and the prices rose up over $20 profit per share, and I made a few $100s overnight. This is called a dip. When you can buy a dip, that means that you can make a killing. But don't just keep putting your money in until you run out, because sometimes it won't come back for a very long time, and then you are stuck with a very long wait and/or selling at a loss. That happened to me just today. I was faced with stocks that had been stagnant for at least a month with noticeable losses. Meanwhile, other shares that I own were making money like gangbusters. Fed up, I finally sold at a loss, then purchased the stock that was making the money. It is now turning a profit and expected to make up all of the initial loss tomorrow. When a bad day hits the stock market, do I panic and sell? No. Does that stop me from buying more stocks? No, quite the opposite. I buy more. I've seen a lot of craziness in the stocks, and often they make very little sense. Companies give good news and the prices fall. Bad news comes and the stock goes up. It's kind of crazy like that. But it's the mental state of mind that you need to get over. We are trained that negative red numbers are bad. But I've spent the past year retraining myself. Negative red numbers are an opportunity to buy in. If you believe it will soon become positive green numbers. As soon as you forget that the stock market is a waiting game, that's when you lose money. I owned a stock for a month and it was down quite a bit. Fed up, I finally sold it at a loss, but figured I could make my money back somewhere else. Would you believe after waiting a month with nothing but negative, 2 hours after I sold it, it had a spike and would have turned into a profit? Unbelievable. A friend once told me, never sell, always add. But these emotions, they're terrible things. I had one stock being at negative $25 loser for 2 months. One day it came back and it made me $100 profit. Sucks that I had to wait that long for one good day, but it happened. The lesson here is not to sell at a loss unless you actually need the money. Just hold out as long as you can. Sell it at the end of the year and take the tax write-off against your profits. What to do when everything is up? Sometimes the stock market is doing so well that nothing is a particularly special deal. I prefer to buy the stocks that I already have on my watch list. This is because I know what they can do, and for most of them, I've already made money. But when I see that all my existing stocks are up for the day and there's no good deals available, I'll go to Yahoo Finance's biggest losers of the day. This is riskier as I have no working knowledge of the company. But still, I try to look for new companies to try out. I need for them to have lost more than 5% today. I'll pick one and start looking into the company, due diligence and all that. What is the current news that may or may not have caused that sudden price drop? Was there a good reason or is it just a dip? Often, I'll find companies that are simply having a bad day for no particular reason. The market works like that. Hedge fund manipulation. Sorry. First, I calculate how much the current price is and if I can sell it within the next week for 10% profit. I'll compare the current price plus 10% for the past week's rolling average. I'm trying to determine how much I can possibly resell it for. If it looks like 10% is a possibility, I buy 5 or 10 shares. Until they are proven, I don't want to put too much into them. When it looks good enough, I buy it. And at the same time, I'll set my sale price as well. Then I wait. It may take a day to get a full recovery. It may take a week. After that, I start looking into the past week's average high again and see if lowering my expectations is more reasonable. I mean, any profit is profit, so it's not like I'm going to be losing anything. No, it isn't the most scientific. However, I've done pretty well like this and learned about many great companies to keep in my portfolio. And it started with them having a single bad day. What happens if the stock keeps going down? Well, you can hold and wait, but it may take a month or two for it to come back up. A possible better option is what's called dollar cost averaging. This is where you keep buying as the prices keep dropping. I used to buy some more if it dropped like $1 or so per share. However, I often found that I would run out of an acceptable amount of money before it reached the bottom. Now I tend to wait longer before putting my money in, maybe $2 or $3 drop. At some point, it will seem to level off and start coming back up. That's when I buy more as it starts coming back. Then you can periodically buy into the small dips when it comes back down a little bit. Eventually, you lower your price per share, and this makes up for the higher price per share, and you break even somewhere in the middle. Then you can decide at what point you want to sell it off. Let's say that a stock is worth $100 and you buy one share. If it drops to $90, you've lost $10. However, if you buy a second share, then combined, your average price is going to be $95. So then when the price comes back up to $95, this is where your break-even point is. This means each time that you buy more, you lower your loss threshold. If you are able to hold on until it comes back, then if the price raises to $110, then your first stock makes a $10 profit and the second stock makes a $20 profit for a total of $30. If you want to learn more, be sure to give this video a like, subscribe, and ring that notification bell. I will have more videos about this topic of day trading stocks. It's quite interesting, though it may be a gamble. It depends on your personality. Everything I do is quite methodical, even if I'm wrong on occasion, and that's what drives me nuts. Minimizing risk. The first trick in my book of day trading is to hold on to 5 to 15 stocks every day, owning 10 to 50 shares each. Odds are some of them will stay down, but others will go back up. When I'm happy with the profits, I sell. I get my money back, and then I can reinvest it in something else. Other stocks I own will still likely be down, so I just sit on them and hope tomorrow is a better day. But a lot of this is overall market trends. Everything could be down on Friday, but Tuesday has some good news and everything wakes up at once. Last month, the market was down for a week, and then one day it woke up and I sold 7 different stocks I had bought the week before. It happens. The second trick is that I've had stocks that I've sold at only $2 profit total. I finally sold because I had enough of it tying up my money for weeks or months. I simply won't buy it again, that's all. But if you stick with it, you'll get to know the stock prices intimately. After a while, you'll learn which ones will drop 5% for the day and be back positive 2% the next day, making you 7% overnight. Even if you have to wait 2, 3, or 4 days, it doesn't matter. It was all passive income on your part. You spent 5 minutes of energy and made $50. How long would it take you to otherwise make $50 from your day job? 1 hour, 2 hours, 5 hours? I understand that while I'm losing a lot of technical analysis by being an uneducated investor, I do believe that if I stick with what I know, Corsair, Lemonade, Jumia, etc., they will constantly be going down and coming back up. That seems easy to me. Buy low, sell high. Know when a company is simply having a good day versus a bad day. It's only when I start playing around with stock I know nothing about when I may win, or I may have to hold on to it for 4 weeks before seeing a small profit. You can look at past numbers, but you're still gambling and hoping for the best. Stocks are not for the faint of heart. You need balls of steel to stare down a portfolio of red, because when it goes on for days and weeks, you start to question why you're doing this in the first place. Just remember not to gamble away the rent money, stick to the plan, and you'll be fine. Please be sure to give this video a like, subscribe, and ring the notification bell. And if you do like content like this, please leave a comment in the description below. Thanks for watching.